Hello and welcome to the SIAA conference in Melbourne for 2024. I'm Grady Wulff, Market Analyst at Tandem Securities. And what better time and place to launch our new brand Tandem Securities than here at the SIAA. Tandem Securities is the newest business under the Bell Financial Group banner, and we're your specialist partner in wholesale trading and investment services. Tandem partners with companies and financial service providers to ensure we deliver a technology-driven client solution encompassing execution, clearing and investment services. So what better way to start a new brand than right here at the SIAA conference by interviewing some of our partners that are existing already to understand their trends they're seeing in the market and what they think of their partnership so far. So let's dive straight in. First cab off the rank today is our partner, Dr. David Sokulsky, Managing Director and Founder of Carrara Capital. Dave, thanks for joining us bright and early on day 1 or 2 of SIAA conference here in Melbourne. Now, you spoke at our partners function back in February and you're really bullish on China. The position was a very hot topic over drinks after you spoke at the function with myself. Tell us about the position and what you're thinking and how it's evolved over the last few months since we last talked.
Yeah, well, thankfully it's paid off quite well.
Yeah.
In a very short term, we have been correct and China's rebounded really strongly. I think when you look at just the fundamentals, and if we get back to really basic investments, and we take out the rhetoric of the market, we just say, look, what you want is solid companies, global leaders, you want cheap valuations, and you want tailwinds, in terms of some regulatory changes and the government support in the market. And China has all those things. And that's what we saw, and that's where we thought that China was a really interesting investment destination. And it's come through.
Absolutely. Well, it's paying off in dividends for quite a few of our people who invested there. I know Marty Johnston is one of them. Also talk to us about Carrara Capital, your fund. How does it differentiate from funds in the market available at the moment? It's quite a different fund, so give us an overview.
Yeah, we're probably one of the more unique funds in Australia. We have no limitations really in terms of where we can invest and how we can invest. So if we see great opportunities in China, we can invest in Chinese equities. If we see great opportunities in commodities, we can invest in that.
Yeah.
So what we see at the moment, we're not alone in this, but there's probably about 7 to 10 really mega trends coming through, whether that's semiconductors, whether that's EV batteries, energy services, and some of those sort of Asian consumer and demographics coming through.
Yeah.
Our abilities, we can play them.
Yeah.
Most other people just talk about them and they can't really access them.
Yeah.
So we can. And then the second leg to our fund is really that we can hedge out the risk.
Yeah.
So if we think things have gone too far, we can, sell some futures contracts. We can hedge out a lot of the risk that we see out there, and we can moderate our exposure so that we're really dynamic in terms of how we access opportunities.
So de-risking and diversification, that's what I've kind of hearing from Carrara Capital there.
In very simple terms, yes.
Very simple terms. Now, there is a lot going on in the world, geopolitical tensions, rising or escalating energy prices around the world. We've got a lot of different things that are weighing on markets. What are you telling your clients at the moment about strategy and different investment opportunities?
Well, the first thing we're telling them is invest in us because we're managing all that day to day.
Navigating the unknown.
Well, that's really it, because a lot of people, just put their money in a let's say you put it in an ETF.
Yeah.
It's just there.
Yeah.
And so you have no control over it.
Yeah.
Where we're actively managing it every sort of hour of the day.
Yeah.
And I think we're in a market where you need to do that because the world is changing so quickly.
Yeah.
We see what's happening in the Middle East.
Changes every day.
It changes every day. And we see what's happening with input prices, whether it's oil or whether it's copper, or whether it's cocoa.
Yeah.
And these things are really having an effect on companies in real-time basis. And so you need to be able to manage that really actively. So I think we've really shifted to a world of active management.
Mm-hmm.
And I think we've shifted to a world of active management plus hedging.
Yeah.
We need to really manage risk.
Absolutely. There's never been more risk, I think, than right now, or more volatility in the market. And speaking of that, there's so many themes out there, as you kind of mentioned: China, the US, monetary policy, geopolitical tensions, AI, green energy transition, you name it, it's all impacting the markets right now. How are you going to take these into account when driving your investment decisions moving forward?
So we have exposure to pretty much all of those things.
There you go.
and that's the base of the fund. So, we say that energy transition, we're long uranium, we're long silver, we're long copper.
Yeah.
We see that EV transformation. We're long some battery companies. We're long BYD in the US. In China. For us, we sit here right now, and I think that we are in the greatest investment environment that we've ever seen.
Yeah.
Certainly since we've been alive.
So many opportunities, right?
It's incredible.
Yeah.
Like you go back 100 years and you had the Industrial Revolution.
Literally.
We now have a brand new revolution.
Yeah, because normally there's one theme in the market at a time. Now there's about 7 going on right now, which is just insane.
We have the Internet of Things.
Yeah.
We have AI and robotics. We have clean energy.
Yep.
And that shift.
Geopolitical. China,
it's just amazing.
Economies, it's insane.
Yeah.
So how are you taking this into account, though?
So we have a lot of exposure to Hong Kong equities, Korean equities. We think Korea is an amazing part of the semiconductor supply chain. Yeah. When you look at what's happening, say, in EVs, Asia is shifting to an EV model.
Yeah.
Whereas the US is shifting to a hybrid model.
Yes, yes.
So whether you play that through sort of Toyota or Kia or Hyundai, whether you play that through BYD, there's a lot of options in terms of how you access these opportunities.
Yeah.
And what you've seen in, say, semiconductors is the supply chain is huge.
Yeah.
So whether you go from the very start through to TSMC, through to Samsung, through to companies in Japan like Resonec, or whether you go through to Nvidia at the end, you've probably got 30 ways you can play that thematic.
Yeah.
So I think the way we're playing is we're really looking at not necessarily the end player. We're looking at who is critical in each of the supply chains.
Yeah.
And to us, that means that if you can't do without them, I want to invest in them.
It's a very, very good tactic right there. And finally, I'm going to put you on the spot. How are you playing the rate outlook theme?
I think the world listens too much to Jerome Powell.
Yeah.
Jerome Powell has 2 motives in my mind at the moment. One is to pump up the equity market, and 2 is to get Biden re-elected.
Yeah.
I don't think what he's saying matches what the data is putting out there.
Yeah.
So inflation is much stickier than what we expected, and inflation has ticked up.
Yeah.
Now it may come down next month, it may go up, but generally it's stickier and higher.
Yeah.
So I think rates stay longer. They stay higher for longer than what most people have expected.
Yeah.
And that's the way we've positioned our portfolio. So we've been floating rate credit for probably the last 18 months.
Yeah.
So I think in that sort of rate environment, I wouldn't expect rates to come down.
Yeah.
Either here or offshore.
Yeah.
Europe will probably cut rates.
We've seen a few of them.
June.
Sweden the other day.
Yep.
Yeah.
But the US and Australia, the data doesn't support any rate cuts.
Yeah.
So be prepared for higher rates.
Higher for longer is what you're saying.
Absolutely.
Dave Sokulsky from Carrara Capital, thanks for your time today. Always a pleasure talking to you.
Thanks, Grady.
Thanks so much.